Hi, welcome to Digital Real Estate. Today we're just going to go over the smaller time frames of Bitcoin. You've seen in our other video the longer macro level of the price that we expect it to go. Um, maybe it's a little different from what you're seeing on the other channels, which is fine. No glitz and glamour here. We're just getting down to talking to the basics about trends and where we should expect the trend to go. We're not going to get too technical. Um, there's other channels for that. I think if you get too technical, that's where you can certainly get wrapped up in the wrong direction and possibly uh, you know get some losses or at least minimize your gains as well. And again, there's no financial advice here. This is just based off of my experience as a trader. Um, I just trade obviously Bitcoin, so I'm just sharing my thoughts on what's going on and what I'm seeing and how I'm playing the market. So feel free to leave a comment if you have any questions or any comments on what you feel uh, the market's going to do. So with all that said, here we go. Um, we're sitting around 48. Earlier we were, in the $46,000 range, which is down back by our descending trend line from the very top at 65,000 to 53,000, descending all the way through to this point, and it's still holding. We have several hours and days, several days, almost going into 2 weeks now, of a price level holding. Um, we're not seeing a slowdown in volume either. We're seeing a pickup in volume, which tells me we have people buying. And the reason why is because if we had people selling and the volume was coming up, then the price should be going lower. And it's not doing that. It's sitting in a range. It's a very tight range. That could change. We've had that, a few weeks back where we were sitting in a range as we teetered down off of the $69,000 and then the $66,000 price. We fell into the 60 and then the high 50s, and that range looked good up to 55, and then we had a break under that, and then obviously you saw what happened from there. So short term, things change quickly, but on a long term scale, as we discussed in the last video, we're looking for a lot higher target. Please check that out if you wish to see what our long-term targets are going forward with Bitcoin. But on the short-term end, we can see now it's actually more convincing than it was back here when we had more of an area where we were looking to break out of. We did test that range down here, and it kind of held, and it came back up to the resistance, and unfortunately, it was just too much for it. It tried to trace along it, and then had one final push up, and it just was like, there's just not enough steam. People were just looking to get out. Also, you had a lot of leverage in the market, so eventually that leverage will get liquidated one way or another. So you have to be careful when you're doing that. Be ready for basically a liquidation event, you should call it, but it's nothing really to laugh at. It's just pretty ironic how it works. So if you don't believe me, you'll find out on your own. It's happened to anyone who's been in it long enough, and regardless how safe you feel you are, there's always a way. There's exchanges that go down, especially on the future contract side, that are way lower than the market price. So you have to be careful at all times. When things go south, you need to go south with them. When things go north, you need to go north with them. So catching a falling knife is not recommended. You can DCA through it if you'd like. I've done that. It's not the greatest strategy, but if you're worried about missing a bottom, it's a way to do it as long as you know how to average out your costs properly and not expose yourself to anything of a large loss. So with that all said, again, the short term here is real plain and simple. We're still going sideways. I didn't even really want to make a video about that, but I figured, to make content, it's important if I'm looking to get things out there for people to, understand the market on a more of a, down to earth, calm matter where we're not screaming and yelling and freaking out because the price fell, or all excited because the price is going up, because that's not what we're here to do. We're here to just, predict what's the best way to play the market and make the most amount of return off of that movement. And that's what the bottom line is. All the hype and the doomness, that's not necessary. The doom is just bringing opportunity. The, bull run or parabolic moves, whatever you want to call them, bring opportunity. You just need to know how to play the opportunity. And if you can figure that out by just looking at a chart, by using trend lines, and that's really all you really need. It's the easiest way to do it versus trying to predict anything else any other way. I use Fibonacci numbers just to see where price kind of fits in and moving averages, where the price is sitting from, but I don't use it as far as, oh, that's where the price is heading next, or that's where the price is going to hold. I just go by trend lines, because it seems like, they'll hit them trend lines at one point or another, whether it's up or down. Or if it's a channel, it's going to hit it. You just got to, it's all about patience. You just have to know which direction to go depending on where this hits. So let's go over that. This is our base right here. I mean, you were really lucky if you got anything down in this one. And this is the ascending channel portion. I just have this line here as well, outlining a very long-term trend up, and that goes back from 2012. We only cut through this line during the March of 2020 correction. We've been above this line since 2012, except for that short period. We kind of rode under it once we did recover, and then once we got over it, we did the 6x from, the regular or the average price of 10,000. We hit 60,000. So, but that's not important right now. What is important is that we're holding the short-term trend in this year. I mean, because you want to look at things from a larger perspective, but we want to zoom in on a 4-hour. I don't really advise to go any closer than that, because then you're just really getting yourself confused, in my opinion. Do as you may, but we're holding the 4-hour descending trend is still in play. We're just still descending. We haven't broken above it. When we do, then we're going to go above. Then we should retest and then go up. Just like the other time. So as you see, we're kind of figuring that's going to be somewhere in this range here. Give or take a few weeks after Christmas. But in the really short term, as we want to stick to, as hard as it is to do, you kind of have to see we're just going sideways, and then we're going to go choppy this little channel here, and then that'll decide where we break out or down. From that point, if we continue to hold here, it'll just ride along, obviously, and then bounce up between there. If we break below, we just look to find the support line from here. If we fall below here and close anything significant on a daily or weekly time frame, we're probably going to be in for a long, run. It's going to, drag out even longer, where the price would dip down and just continue to go down, and probably looking closer to 35, 30, 28 even, triple bottom, but unlikely in most cases because of the people who've bought in, how much they've bought in, and who's still holding. And those people are still holding as well, and a lot of us are still holding. So you got to get a lot of people to sell unless you're doing something else to move the market, which I don't see playing out, as you can kind of tell with the volume perking up even on the contract side. The price, obviously, just staying straight in a straight line, pretty much from where it bounced up from, from that liquidation event. So that's where we're headed. We're headed straight through this thin green and thin red line over here. Okay, that's where we're kind of headed, right through here. Wherever it breaks down is where it's going to touch, and then it's going to need to hold that, and if it breaks below, it's going to have to retest and hopefully, stay above. Um, if not, then hey, just another opportunity. But we have this really solid line right here that's already been tested on the wick. And if we just want to zoom in just a little further back and just see how much this line is held up on a short term time frame, sorry about that. Of course, it's not going to want to work right now. But anyway, there it goes. It's coming now. Not sure why the screen's doing that. Probably because I'm recording. But in any event, you can see what's going on here. We're getting our massive target up from our top of the previous ascending trend that turned into the descending top of the trend to the bottom of the ascending trend. We're going to measure that, and wherever the breakout is, that's where we're going up here. If we break down, then we want to measure from the descending portion. So that's going to be from here to here, and then you would just put that here. So I would probably just put us back in this $32,000 level. So it's kind of where we're at. I mean, still nothing's changed. It's probably not going to change for quite some time, They got to change things up. They can't make everything look the same. They're watching us on YouTube and what we're saying about it. So, they're going to decide the direction we go, and they is whoever they are and the people that are, in high demand of this asset. I mean, they have a lot of it, and they're controlling which way it's going to go, and that's just any market. They're market makers. So what we need to do is just be patient and not get all hyped like everyone else or scared like everyone else, because there's nothing to be scared of. This is crypto. This is basically a tech play that runs 24/7 around the world, has a cap supply, and has ascended ever since its inception. So you just have to make sure you're playing within the ascending trend. Now, everyone can see this now. As long as you're playing on the line down here, you don't have a problem. I mean, that goes back years. And I'll cover that in another video. If you're buying down at this line over the last decade, you have made more money than probably most people will ever make in their life. Especially if you put even a few $1,000s in each time at these lines. I mean, that's how powerful a move this market has made. I'm talking over a decade, obviously, not over a 4-hour period. We've already discussed the 4-hour period. We're not going anywhere other than within this symmetrical triangle. And we were still in somewhat of a symmetrical triangle on a large time frame, kind of like just going consolidating, making it look like it's going higher. It did make a higher high. It also made a higher low, but still consolidating within this channel till it breaks above. And obviously at 88, we're above that. So then we should break above that, then come back down and retest that trend line when? All the way down here. It's not going to be a back down and then back up. It's going to extreme volatility go up and then bring us right back down to this line. So it's going to go up, maybe up around this bar here will be your top, roughly. But at the price range down here, around the 80 up by this, because that's where the channel will be at that point when we get there. And then we're just going to come right back down here. back in the 50s. So it depends on when we get there before we'll know when we get down to here. But that's where we're headed. So we could head down here, we could slide to 45 and right back up to the top of the channel and back on down. So you just gotta be patient. If you look at this from a longer perspective, you see it. You can trade the shorter perspective, but if you go within the 4-hour period, you get lost. You stay outside, 4 hours plus. 1 hour, not worth it. Anything else is just a waste of your time. You're going to lose money. You're going to drive yourself crazy. You're going to have to be really fast on top of it. Short term, yeah, you can do that every day. No, it's not worth your time and energy. So just zoom out and spread out. Wait for your opportunities if you're buying down here or longing. Short at the top of your channels. Any trading. Just short up here, buy down here. Anything in between, you should be in your trade waiting to take profit. If you look at this, look, see, you came back down. You had your 1, 2, 3. You have more than you have a triple bottom basically, but you have more points of that on a 4-hour period. So you have a really convincing trend here. So you get in here, you see, okay, well this thing isn't going down, so let's get in and play it till it goes back up, or at least here. Then it flagged across and went up. But play your bottoms. When we hit this line here back in July, when we finally got out of that funk, we're not in a funk right now. We're just in a little drop. Seems like a lot, but you gotta understand we came from a pretty far price, a pretty low price not too long ago. Regular markets don't move that much, so you gotta take the good with the bad. If you're gonna go up a lot, you gotta understand you're coming back down a little bit more than everyone else. And that's even worse with altcoins, because I'm not even going to get into that stuff. But we were above this channel before. You can make this channel bigger, but I'm saying within a reasonable period, this is where this thing's been trading. Not making it too big, not trying to cover all ends on the short term. Just enough. 6 months. This is 6 months of action. And then if that 6-month direction changes, then you change your channel. You tilt it this way, descending, but that would have to break below here.